Our third honorable chief guest, that is Mr. Deenal Shah. Sir is practicing advocate and is also a chartered accountant by qualification. He has more than 30 years of experience in advising clients on taxation, exchange control, insolvency, and corporate laws. He has been extensively involved in advising Indian corporates and multinational issues relating to double tax treaties, due diligence, transfer pricing, foreign tax system, corporate tax, and accounting standards, including IFRS and insolvency. He is a former partner with EY and also an executive committee member of the International Fiscal Association and secretary of ITAT Bar Association, Ahmedabad. He was a Central Council member of the Institute of Chartered Accountants of India, director of IPA and RVO formed by ICAI, and was the chairman of a direct tax committee of Gujarat Chamber of Commerce and Industries. He has also addressed and presented papers at various seminars and conferences on international, non-resident, and domestic taxations, transfer pricing, accounting standards, insolvency and bankruptcy codes, valuation standards, etc. He is also a regular contributor of articles to the Institute and other professional journals. Sir, we welcome you to this session and we would like to hear a few words of wisdom. The stage is all yours.
Thanks, Sarthak. Thanks, Madam Divya, for giving me this opportunity. I know you started session at 3:30. I won't take more than 15 minutes and apologies to all of you for joining late. Let me first take up a few critical issues which I believe is relevant from the tax and the economy. Every time when you read media, every time when you hear the finance minister, if you hear any government officials on the tax side, the efforts of the government is to how do you increase the number of taxpayers. Now today on a population of 135 crore, the average taxpayers are around 7.5 to 8 crores. If I exclude people between age group of 0 to 18, which may not be paying taxes or which may be paying taxes along with their parents, which would constitute around 35% population, then we are left with around 80 to 85 crore of people, out of which we have a taxpayers of around 8 crores. Which is approximately 10%. Now, what does this mean? This means that the tax GDP ratio on a direct tax front is around 11.5. If you consider state and the central both taxes together, it would be around 16.5 compared to Asia Pacific region average of 21%, a China tax GDP ratio of 22%, compared to an OECD average of around 33%, and the highest tax GDP ratio in a country like Denmark, where it is as high as 43 to 45%. So if India wants to reach from 16.5 of state and the central tax to at least an Asia Pacific region of 21-22, we need higher taxes. One interesting data, so as on March 31, 2018, we had 5 crore 87 lakh taxpayers, out of which there were only 364 taxpayers which had showed an income of more than rupees 50 crore, or there were only 1,500 people who had showed an income between 10 to 15 crore, and these 364 beyond 50 crore would include large conglomerates like Hindustan Lever, like Reliance, like Tata's, or certain large high net worth individuals. There was a huge high discussion in the media before budget that government may introduce some wealth tax on the high net worth individual, which will help to collect substantial taxes, which in my opinion are the right step by the government to maintain a consistency in the tax positions. Practically, there is no change whatsoever in the tax rates, except that in case of an unlisted shares, where if your income is between 2 to 5 crore, the surcharge was 25%, and income below above 5 crore, the surcharge was 37%. That has been kept at 15%, similar to the listed securities. In other words, the listed securities and unlisted securities, including the dividend, the surcharge has been kept at 15%, irrespective of your income, whether it is less than 5 crore or whether it is more than 5 crores. So that is one good thing which has been done to align the surcharge on listed and unlisted securities. The revenue from a tax perspective has grown almost by 70% on the direct tax front and 44% on the indirect front. Last month collection on the GST was as high as 1,30,000 crore, which ultimately government wanted this money on a revenue collection so that they can support the economy from the, particularly in these last 2 years of pandemic situation, and they are able to pass on that benefit to the people who are in need of during this pandemic situation. The second important point, which when I joined, Mr. Tandon was referring about the cryptocurrency or virtual digital assets. I only wanted to make 2 points, and I'm not a tech savvy, so I may not be able to give you a perspective of what is crypto and what is blockchain. But 2 or 3 perspectives wanted to share with all of you. One, way back in 2018, the RBI issued a circular banning virtual currency, which was challenged before this Honorable Supreme Court. And Supreme Court struck down that circular of the Reserve Bank of India. And therefore, since 2018 till today, theoretically, the virtual currencies or a cryptocurrency or a virtual assets is actually a legal activity. But there were a number of inquiries made by regulators on different crypto exchange, and therefore people were not having a clarity as to what will happen to the legal currency like crypto. So this time in the budget, along with the tax laws, they have also amended Reserve Bank of India Act to empower Reserve Bank of India Act to introduce virtual rupee like in Indian rupee. So Reserve Bank of India in next few months will come out with what is virtual rupee guidelines in relation to that, and then it will become a legal by introducing in the tax law. Today also there is no clarity about the legal form of these virtual digital assets. From a tax perspective, prior to introduction of this budget, there was no clarity that what will be the treatment of the taxation on the crypto. The general view across the world is that it will be treated like a commodity, and therefore if I hold as an asset, capital asset, for investment purpose, it will be treated as a capital gain. If I hold as a business activity, it will be treated as a business activity. But now there is a formal proposal in the budget that any gain made from crypto exchange or crypto trading, it would be taxable at 30% flat rate. The loss made from this activity will not be allowed to be set off against any other income, neither it will be allowed to be carried forward. And except the cost of acquisition, no other cost will be allowed as a deduction for the purpose of crypto. There are many administrative and procedural changes in relation to the other direct tax and indirect tax proposals, and therefore I am skipping those proposals as far as the administrative and procedural aspects are concerned. The next point is on the digitization. To my experience, India would be one of the rare country in the world where the digitization, particularly on the direct tax, indirect tax, corporate law, has been implemented by the government. Like under the indirect tax, each invoice of the supplier is uploaded onto government portal, which is matched with the buyer invoice, and then only the credit is given. I don't think is there any country in the world which has this system. Our largest developed country like United States of America do not have a GST because there is no one view between the state and the central or the federal level. Though India has been able to implement, though politically it can have a separate different governments on a political front, but as far as GST is concerned, the formation of a GST council has been one of the good initiative taken by this particular government. On the direct tax front, today substantial things are on digital front. The government is still improving upon the digitization in the tax laws. At some point of time, there is a proposal that direct and indirect tax, everything will be merged from the filing of documents perspective, so that people have to less comply the respective law, and at least there is a uniformity in the information submitted to the government. The other important change which government is planning to make is to make post office and banks core banking on a common platform. So the entire post office across India would be put on a core banking platform, and there will be a complete uniformity between banks and post office, and which in my opinion is again one of the far-reaching change. The next is on the land digitization. I come from Gujarat. Gujarat has all the land records which is completely digitized. I can see my ownership of a land on a screen, including the circle rate, including the location of the property, including the ownership of the property, which is not there in many parts of the country. But the proposal is to make central and state align on digitization of the land records. Similarly, the building plans, the corporation plans, and the other authorities which are in relation to the construction of a building and land also will be digitized, which will completely change the entire working as far as the email property is concerned. The next point is in relation to the insolvency. There is a proposal to introduce a cross-border insolvency into the insolvency bankruptcy code. If I just take a minute to give you what is cross-border insolvency. So today when the IBC code was implemented from 1st December 2016, the cross-border insolvency was not there, and it was a part of a proposal under the Banking Law Reforms Committee. So today, if any company is under the CIRP process and it has an overseas subsidiary, the Indian insolvency professional or the adjudicating authority do not have any control over the overseas subsidiary or vice versa. What is being proposed is that after introduction of the cross-border insolvency formally under the law, based on the unilateral principles, there will be a adjudicating authority working in coordination with the foreign court subject to certain guidelines being framed by the government. The Indian insolvency professional and the foreign country insolvency professional will be able to work professionally in both the countries on a vice versa basis. And the foreign creditors and the Indian creditors on a vice versa basis will be able to file claims against the corporate debtor, and which in my opinion will increase substantial professional opportunities and will also change the behavior of the borrowers on a substantial basis. Sarthak, how much time do I have? 5 minutes?
Sir, your wish. I mean, whatever you would like to cover.
Okay. No, I'll finish in 5 minutes. It's almost
Sure.
5:16. The next is On the International Arbitration Center, the Gujarat, from where I come, we have a GIFT city, Gujarat International Financial Tech City, which is the only financial SEZ in the country. The proposal is to introduce International Arbitration Center in the GIFT city, and which the plan is to make it similar to a Singapore International Arbitration Center, so that India also becomes a hub for International Arbitration Center, and all of you as a students would also have a big opportunity on this International Arbitration Center to work as in professional in a different capacity. The other substantial change which is being made is that the International Financial Services Act has made it independent of other regulators like SEBI, IRDA, Stock Exchange. And in the tax side, there are 3 exemptions which have been extended if you do any activity from GIFT. One, last year budget had introduced that if you give an aircraft on lease from a GIFT city, the income will be exempt. That benefit has been extended now to a ship. There is also a proposal that if a non-resident does any activity of an offshore derivative trading or over-the-counter trading derivative instruments within the GIFT, the income will be exempt. And if there is a portfolio manager who has a non-resident investors who does activity as an offshore banking unit sitting outside GIFT, then also there would be an exemption of an income as far as the non-residents are concerned. So the government intention to grow further the GIFT city is also very manifest as far as the substantial investment activities which are being made in a GIFT, both from an infrastructure, both from an approval, and also from a single authority perspective. The next is the profit link incentive. In view of certain slowdown of manufacturing activity in last 2 years, the government has introduced profit link incentive in almost 14 sectors, which include pharma, chemicals, textiles, automobile, medical equipments, etc. The intention is that any industry which qualifies based on this criteria will be given a staggered incentive to the corporate, and based on the investment made by the individual corporate. And there is an expectation that there will be an increase in production by almost 30 lakh crores, and there will be in the new employment generation of almost 60 lakh jobs, which is again one of the good initiative which government has taken to promote manufacturing activity in India as far as certain select sectors are concerned. Last 2 points. One, that on the digitization, again, there is a digital university concept which is being introduced. So you have private sector today which is doing substantial online education. Now there will be done in almost 200 different channels, which will provide education to the students across the country in different languages, which will also increase substantial the penetration of the education to our remotest area. And the last issue is on the challenges. The crude oil price, which has already crossed $92, our foreign exchange reserves are around $636 billion as on 31st December 21. And the fiscal deficit, because of the certain pandemic benefits which the government has passed on to the citizens of this country, including certain small and medium-sized industry, the fiscal deficit is around 6.4%, which is expected to be reduced to 4 to 4.5% by in next 3 years. So inflation would be one of the challenge. But I will believe that with every growth in the economy, where the economy is growing at between 8 to 9% consistently, and if based on the International Monetary Fund, the Asia Development Bank proposal, India is going to grow at 8 to 9%, the inflation would be one of the challenge. Today, it is around 5.6 to 6%. The second important aspect which the government has to make more efforts is to generate employment. Now, there is one distinction between an unemployment and unemployable. For making making employable people from an education is about the quality of education, the quality of the teachers, and the quality of the nurturing which is being done during your school and colleges. But government must make more and more efforts to generate employment. The PLI was one of them. The substantial capex investment of 7.5 lakhs crore or certain other schemes which the government has introduced as a part of the capex is the other initiatives which government has taken for the purpose of generation of an employment. But once the employment is generated and there is a support to the small and medium-sized enterprises, because I would always believe that in a pyramid of this structure, the small and medium-sized and MSME sector is a foundation for any large industry. And therefore, one challenge which has happened in the pandemic, that many MSME and many small businesses have suffered a lot. They need to be given sufficient support so they can come back to the same level. They are able to compete on merits, on efficiency, on cost with certain large industries, so that ultimately the pyramid continues as a strong foundation for the purpose of business. In my personal view, as citizens of this country, the government is doing their best. As citizens of this country, is also our duty to do the best in reciprocation. And if we all work together, the future is bright. India has a long journey to go from 2.5 to 3 trillion to 5 trillion. People do compare India with China. But again, my personal experience is that the independence, democracy, and the size of the market which India has, I don't think all put together is there in many parts of the other countries. And therefore, people have realized that compared to many other countries, India is a good location. But yes, and we as Indians are more efficient, more hardworking, more knowledgeable, more intelligent, and English speaking class. And that helps all of us to our advantage as country. Thank you very much.
Thank you so much, sir, for such informative words. Your insights have really broadened the horizons of our knowledge base. Now, I would like to invite questions from the audience to be answered by our eminent speakers. So we have two questions in the chat. First is by Kushal. Sir, will cryptocurrency considered as legal tender money?
So my view is that as of now, it is not legal under the law. Based on Supreme Court judgment, it is not illegal also. But once the Reserve Bank of India Act has been amended now in the proposed budget, and once the law becomes implemented maybe by end of March, it will become a legal tender, and we will have to see for the guidelines issued by the Reserve Bank of India that how do you integrate the Indian rupee or Indian currency versus virtual rupee, because there is one genuine challenge of the crypto in the blockchain is the anti-money laundering activities and certain illegal activities which people can do. The OECD, the Financial Task Action Force, FATF, has also raised their concern. Today, China has completely banned cryptocurrency. Japan has issued a draft law. European Commission 6 months back has issued a draft law. US has also issued a draft law. Singapore has already issued a draft law for the NFT. So I think it would be very premature to say right or wrong. We will have to learn to get accustomed to over a period of time. And I would believe that by introduction of a TDS provision under the Income Tax Act along with in the budget, the monitoring of these activities, particularly the people do not undertake illegal activities, people do not take any money laundering related activities. Because if I want to transfer something from one country to another country, it is very, very easy because there is no intermediate between the two people. And therefore, we will have to see for Reserve Bank of India to frame guidelines and how do we avoid any anti-money laundering activities.
Thank you, sir. Uh, Deepak sir, are you trying to say something?
Yeah. Am I audible now? Yeah. Only hardly
No,
1
no.
minute. I just yeah. I think I'm audible, no?
Yes, sir. Yes, sir.
Yeah. So at the outset, I thank CA Dinal Shah for giving very elaborate, exhaustive answer to this question. I just want to add only one word only. Is as on today, there is an app, there is an exchange. This is only MobiQuick. But there are other exchanges which are there, which are WazirX, CoinDex, CoinSwitch, Kuber, and these are some exchanges from where the cryptocurrency trading can take place. It's a P2P, again I've told you. And as on today, we only have a fiat currency, which is US dollars and Indian rupees, which are basically rupee has been weakening or stronger, whatever we want to do, only with one US we'll look into. But this Bitcoin, basically, Supreme Court, as rightly said by Shah sir, CA Shah sir, that Supreme Court wants it. Reserve Bank does not want it. Central Bank doesn't want it. Why does? Because of money laundering. There will be layers will be there into the money laundering, and this mining can basically people are using it for reward points. So discounting will be done and reward points will be there. So there will be more of a, it's not that I won't say that the ledgers are not going to be created. The ledgers, everything will be created. You see, it's a blockchain is a ledger. Blockchain is nothing, but it's a ledger. It's a recorded digitally. But then, it will have no value. Bitcoin, as on today, doesn't have value. It creates a value. So you have to look into it. Just only artificial currency, a digital currency. Look at it. And Bitcoin is just only a way to express your cryptocurrency. You see? So Shah sir, you are right that Supreme Court wants it, RBI doesn't want it. Yeah,
Sir?
because of the reason. Yeah.
So Supreme
Yes, sir.
Court is only looking at the fundamental right aspect that no person can be debarred from.
Correct. You
From
can't
doing
pass a law, otherwise you can't go to Supreme Court. There will be the procedure doesn't allow. Law doesn't allow to go for appeals and for the double bench and all into the Supreme Court like that. It's a very expensive thing. So we don't want anything, but Supreme Court doesn't want to take your fundamental rights. But there are problems in it. There are problems in it, but rightly assessed by our finance minister, she is taxed at 30%. It's a good move, no doubt about it. But then, as rightly told by Shah sir, it will take some time. So 1 year or 2 years, and everything will be clear that will it happen or not. Because you people are into analytics, my dear students. We learn AI, we learn our data mining, we learn blockchains into the IT sector. Sani sir is the best person to comment on it. It's very high.
Actually feel what is Indian rupee. You can't feel crypto.
Correct.
I would
Sir,
like
I think,
to thank all
next.
speakers today. I
Yeah.
mean, it was such an informative session taken up by Professor Anil Kumar, Professor Deepak Tandon, and finally we could take out, take up your time, sir, also, CA Dinal Shah, sir. So it was really informative, and I think all of us have learned a lot from various perspectives which you have presented on the budget today. And we would like to have you again in some other sessions as well, because it was really thought-provoking. Your ideas were really very knowledgeable for our students. Thank you so much for taking out time and coming over here.
Thank you, ma'am. It was our pleasure. And again, apologies for being late.
No, sir, you were really occupied and busy. I understand that. Still, you could make it. I am really thankful for that. Because I was at least skeptical at the end that because you were extremely busy, as you told me. So, still, you managed to come. And thanks from, I think, Professor A.K. Seni, sir is there, or from on behalf of University School of Management Studies, I thank all the distinguished guests for coming over here.
Thank you. Thank you.
Thank you.
Thank you.
Thank you.
Thank you.
Yeah.